Hello, traders. It's 8:06 a.m. Chicago time. It is Monday, the 8th of June, 2020. Thanks for joining me. I'm not on my normal workstation, having some trouble with some technical issues. I almost need like a tech person following me around and just making sure this stuff works, although I'm very technically inclined. Anyway, this is episode number 1771. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall sentiment is allocation to risk again. We sold off a little bit on Friday um, after gapping up. Gap was not filled. We gapped up and then we pulled back in the afternoon, pulled back to the key low volume node in the S&P 500, and then we held that overnight. Now we're bouncing higher, trading above the 3187 close. Currently, the S&P is at 3207. The leader this morning is the Russell. The Russell again ripping higher, trading at 1531.20, up 28 points, 28 points, quite amazing. And that's where we stand this morning. It's nothing can hold a good thing down here, and so that's where we are. Why is my one second? My book map is not connecting. Not sure. And so that's followed by the Dow, which is up 242 points or 0.89%. Gold is higher, but is below the 1700. Gold took a bit of a hit last week, trading at 1694.9, up 0.71%. And then comes the S&P 500 up 21.5 points or 0.67. But intermixed in these indices are some of the safety, what we'd consider to be safety assets. The yen is up. The yen is up. The bund is up. The euro's up. The pound is up, and the 10-year note is up. What's off today is crude. Crude trading at 38.87. OPEC has been meeting. And the crude is responding. It's down 1.67%, trading at 38.89, off 66 cents. The Euro Stocks 50 are also off this morning, trading at 33.74, down 7 points, which is about 1.5 rotations. And so that's where we stand. In terms of what is expected for today and what was taking place overnight in terms of high impact numbers, we did get industrial production out of Germany month on month, came in at negative 17.9. Month on month industrial production negative 17.9. The prior is negative 8.9, expected at negative 16.8. So that was a miss. And a relatively bad one. Housing starts out of Canada came in at 193,000 and a half, which is better than 155 expected. At 15 minutes after the open, we expect the ECB's President Lagarde to speak. We do get consumer inflation expectations for May at 11 o'clock Eastern. Lagarde speaks again at 11:45 Eastern, and then this evening in Australia, we have the NAB business confidence at 9:30 p.m. expecting negative 32 or forecast negative 38 actually. That's what's on deck. What was expected on Friday versus what we got? On Friday, we were looking for a market that's going to open and push higher immediately into the 3200. Expected it to fail at the 3200, and start filling the gap. I was looking for a test of 3190, 3155, really 56 on the downside. That was the key expectation. The secondary is to pull back, find buyers, and push higher. The tertiary is to test down and an impulse up and hold up in the 320150 area. Looks like scenario three uh, took on the day on Friday. We open, we test lower, and then we have this impulse higher, very strong push higher, and it takes us to 3210 instead of 320150 is expected. And then from there, it's just not able. It ran out of steam. It's not able. There were several opportunities on Friday, in my opinion, to jump on the long side. If you look closely, and I don't have time for a playback right now, if you look closely, we open and we establish a clear open auction, the opening swing at 73 to 68 and a half, and then we push out, up and out of the opening swing. So this is what we call initiative. So we have a gap and go situation, pulls back to the mid VWAP area. It's too early to catch that, at least for me at this point. The market's been trading for about 5 minutes or so. And then what it does is it continues and we have our first genuine impulse up. And so now we're triggered long, looking for a test of VWAP mid. And it ends up pushing the VWAP mid. We're at 74 or 75, and it pushes to 72, well within the stop distance, and then it finally dips higher. It does fail back to the mid, and we just have to sit through this kind of pain of coming back to the entry, and then it finally rises. That being said, it ends up with an impulse and pulls back right to the mid area, missed by 2 ticks, 3189.75, giving us a bit of a spot to at least scalp along here above 3200, pushes 3205, and then it's just not able. It holds steady. The point of control shifts higher, and then the market really kind of balances out into the close and sells off. It's non-farm payroll, so you're gonna get that move early, and then it's just dead. And that's basically what we got on Friday. We had a market that popped up and then held a bracket up here and then shifted that bracket down and held it down here before close, giving us a key low volume node at 3184 right here. And that's where we set up our overnight low. Our overnight low is at 3183 and a quarter. And the overnight point of control is above the century figure, above the 3200. And so it moved. It's moving back to the overnight high, which is basically 4 ticks above the Friday high. Here's what we know. What we know is this baby here is not giving up any down territory. So we have a massive gap now beneath us right here. It's outlined by this shaded area in our master levels. And by the way, the master levels have been moved to the convergent server and are no longer on the Futures Trader 71 website as we consolidate all of the resources available to convergent members. I'm sorry, I've run these things. I've run the master levels now for about 4 years, and I just need to consolidate so that other people can help in managing all the things that have to be done so that I can focus more and more on trading. So those of you who used to get the master levels from the Futures Trader 71 server and aren't seeing them this morning, it's because they were moved to the Convergent server and are no longer available. Sorry about that. It's just I need to manage my time a little bit better. So we left behind a huge gap again, but in general, what we've done if we've left behind a lot of gaps. So if I turn on the master levels here and squish this chart, you'll see that we've left those gray areas. These areas here are all incomplete auctions in an undiscovered gap zone, and we just keep creating more and more. We're heading back towards a 3,300, and the all-time high is what, 3377 or something like that. And so bulls are just unrelenting, unforgiving. One thing you want to remember is that the market is a forward-looking mechanism, right? It's a price discovery mechanism that is constantly looking at where we're likely to be down the road. It is not pricing in what is currently there. It's pricing in what's ahead of what it anticipates to be ahead. You don't make money by investing today in today's news in today's valuation and conditions. You make money by anticipating where valuations will likely be, where the valuations are likely to be, and trade there. And so the market, with the flood of money coming in, with an election year, which traditionally, seasonality wise, is a bullish year, with the situation with COVID seeming under control, although we're still climbing in the death and infection rate. That'll continue for a while, but the market's discounting a lot of that. The market's also discounting cheaper labor, as 40 million people are out of a job, things like that. So just remember, there's a bigger macro picture here in play, and I don't know what it is exactly, and I think most people who think they know don't. But we've climbed above 3,200, and we're within earshot of the all-time high. We're within a few percent of the all-time high, and that's very, very significant. Okay, so that's the recap. Looking at the overnight, nope. Looking at the overnight session has really decent volume, 381,000 contracts, but has been completely balanced. I mean, we have a very weak low, very weak high, poor bookends on both sides. And what it did is it held on to Friday's key value area up top and is holding in that area. Notice that Friday, even though it opened down here and closed up here, Friday had this delta that kind of swooped down. Let's take a look at the delta for a moment on Friday. Friday's delta was very, very interesting in that we gapped. So here's the open, the green dots, as you already know from my other charts. We have the open, which corresponds to the zero line here in the volume delta, and the market pushes up, pulls back, and continues higher. And here's the delta with it. So this is where another thing that feeds into getting long. Uh, uh, it feeds into taking that long at the mid. But here's what happens at the peak. We do have this pullback and a kind of a sideways, as I mentioned earlier, a sideways trade in these two, almost like a pitchfork type of formation that is sideways. But the overall delta pulls back. The high volume, remember the yellow right here, this is the key. Yellow is the very large lots. These are 100 lots or better, reassembled trades. They go kind of flat, they buy a little bit, they go kind of flat again, they buy a little bit on the close. But the small lots are just massive sellers. Anything that's below a 10 lot, 9 lots or less, 9 to 1 lots, are selling all of Friday. So as the market was sitting sideways, the delta actually went negative. The cumulative delta is the bar chart you see here. And you can see it went negative, large and small lots, sellers, and it kind of bounced up at the close right here. It bounced up at the close. There was some buying, some leveling out for the week. But overall, the delta was not 100% with us. So we have a gap and go situation with a weak delta. And to me, this this is an indication, another indication that to be cautious, if you're a swing trader, to be cautious on the long side, as we're not getting that quick feed or quick push and sustainable push and support from the volume. Price is king, so we have to follow that. But overall, the delta was not entirely there. Currently, this run up in the overnight session gave us a positive delta. Overall, the overnight inventory is long. The market is still bullish. It is not giving up any of the territory it had gained on Friday. Didn't swing back at all last night, and it opened and tested the Friday close and bounced right back up and pushed all to the overnight high immediately, and has walked back to it. So it has successfully tested down and is unable to hold lower prices. So let's leave that at that. I cannot show you the heat map today. For some reason, my book map just keeps saying connecting and it's not connecting. I'm on my laptop again, so I'm guessing I need to update something. So for the moment, I'm going to remind everybody that tomorrow, myself and Edge Clear will be hosting the creators of the small exchange for a webinar at 4:30 Eastern. You have the link in the live chat. You also have the link in the YouTube description of the video. If you go to the description of the video, you have the link in there. And of course, you have it in front of you on your screen if you're on Periscope. And you can find it on my Twitter feed, twitter.com/FuturesTrader71. We'll be hosting a panel of speakers from the small exchange. They'll give us an overview of what they're offering, what their plan is, what they're doing for the small, online, self-directed, independent trader. But we also left about 20 to 25 minutes of questions in case you want to ask. I would really like you to register for this event. You will not be spammed. As a result, you will get the video recording. Even if you cannot attend, please register, as you will get the video recording once it comes out without having to ask for it. And yes, this is recorded. That is the most common question we hear. So let's take a look at what's expected for today, given how we are set up. And we got some key areas above and below us. And here's what I'm looking for. So this morning, week high, unable to give up any territory to the downside. And the expectation is an open auction that tests down, and I'm looking for a test into 3202, potentially 3200. The overnight point of control is at 3203, and then I'm looking for an impulse out and a higher high as we continue moving the value area higher and the point of control higher. And so here we're looking for 3216.50, and if the low is around 3202, we're looking for about 15 to 17 points of range, and that pushes us into the 32.25 even for balancing out. The catch with today is this. The catch is that it is non-farm payroll. It's the Monday after non-farm payrolls, and in general, we are likely to sit sideways quite a bit. Positions have been taken, and Monday after non-farm payroll traditionally does not have a trending mode to it, and that's just kind of a behavior that this market has. It has trended here and there, but in general, we don't get much follow through on Monday. So still, given the gap and go situation, given the fact that it tested down and held the point of control down here at 31.85.84 and is pushing higher with a weak high, the expectation is shorts will continue to get squeezed, and it's going to continue higher. Secondary is we clear out the weak high, and then we respond down back to the point of control, and we test the range from Friday. Remember, on Friday, We finished with some selling. We finished with the delta, as you can see here, selling off, and this may resume and end up down at 31.64 this morning. Good idea to wait for a response. If it does not respect the area and it pushes through, then you have a bullish market. We're looking for a pullback to a market generated structure like a mid or a zipper or something like that with defined risk. Take the long, look for the continuation. Otherwise, if it fails through and we get an impulse down, then we're looking for pullbacks. So the question is, who wins this fight early on? Is it buyers or is it sellers? And we need to give the market a little bit of time, 10, 15, sometimes 20 minutes uh, before we can see that. Okay, so take your time today. Monday after non-farm payrolls, people come in and tend to want to trade a breakout, and it tends not to have any. Okay, good luck, and I'll catch you. I'll catch you tomorrow morning. Please don't forget to sign up for the small exchange event. Take care.